I've always liked to prepay my mortgage. Whenever I had a mortgage on my house, I like to prepay my January. I know it's due January 1st, but I usually paid it around the 5th. But instead of paying it on the 5th, I like to pay it on December, not 31st, because their accounting is always screwed up and you're not going to get credit for it. But if I can pay it just a few days early, let's say the 25th or the 26th or the 27th, give them time for their record. I would just as soon have that mortgage interest deduction this year. And I always like to prepay as much as I could. If I could prepay 2 months, if I had the money to do that, I'd like to prepay and get that deduction now rather than next year. And so that's a very, very simple thing that most people can do if you've got a mortgage. And you're planning to itemize, is simply pay your mortgage a few days early. Now is also a good time to look at marriage and divorce. If it kind of takes the love and the out of marriage, but sometimes it is a financial decision, or at least could I get married this year before December, or get married in January? Sometimes it does make a big difference in your taxes. Also, if you have alimony, you could prepay that, or at least catch up if you're paying that. That way you get the deduction this year. If you're receiving, and you can do without the money for Christmas time, maybe I want to delay those alimony payments, because those would be considered taxable income if you're receiving it. It's a tax deduction if you're paying it. Remember, December 31st is the deadline for all of that. And then there is right now some fairly substantial incentives, married filing jointly, at least on the federal side. On the state side, sometimes it becomes more of a penalty to be married, and so look at your taxes on a state and a federal level. But federally, generally, you get a larger standard deduction when you're married. You're in lower tax brackets, and you get higher qualified business income thresholds if you're married, as opposed to being single. And then now is a really good time for me to look at charitable contributions. There's really two ways right now you can deduct charitable contributions. Number one is across the board for everyone can deduct up to $300 per person on your federal taxes. And I don't have to itemize. Now, because I've had kids and we've had a mortgage and we've done a lot of charitable things, I've always been able to itemize. This year, with all the kids gone, we don't have any kids at home, we're empty nesters, and mortgages paid off. Now I have to do some creative things with my itemization. I might want to hold off on my charitable deductions this year and do them all next year, so that I've got enough to itemize. Otherwise, a standard deduction is good. It's better than it was a few years ago. You remember it doubled. But I may not have enough without the mortgage and without the kids. Standard and charitable deductions, I may not have enough to claim any of those charitable deductions if I don't group those into the right year. And so now is a really good time to look at that. Remember, whenever you're donating to charity, it has to be a qualified, like a 501(c)(3), it has to be a qualified charity recognized by the IRS. You document all the contributions, and then don't forget mileage for your service. You don't get mileage deductions for worship, for school, but you do for service to charitable organizations. And so